Okay, let's get into the stock market technical analysis. Big week this week because we have large cap tech earnings. These are the heavy hitters of the market. These are the big trillion-dollar companies. Believe me, where a trillion-dollar company goes, where that stock goes, it's going to move the market. All right, they're weighted so heavily within a lot of different indices that if they go up, those indices go up, and if they go down, those indices go down, dragging everything else down with it. So that's very important. We'll have those earnings this week. Today, I just want to go through kind of what the broad markets look like. I've got some various kind of trade ideas to kind of cover, and then we'll wrap up. Triple Qs, the big picture here, this is your tech sector. We're still in the bearish rising wedge. We still have negative divergence. Nothing's changed really from really nothing's changed for a couple weeks now. The negative divergence on triple Qs started to show up basically about right in there. But in general, you can see we are wedging higher. All right, continuing within that bearish rising wedge. And momentum continues to, basically diverge lower. All right, momentum dropping off. You can even see on the PPO, look, momentum is kind of dropping off. So in general, we've got dropping momentum, rising prices. That's negative divergence. And we're still in the wedge. So it can go either way. I mean, here's the thing. The all-time high in triple Qs, which is also the bearish engulfing, is right up here. I could probably mark it out. I guess since I don't have it marked out, we'll just go all-time high. It's basically right about 50291. We're very close, and we're within that wedge, so I could easily see us popping up and maybe hitting the top of this bearish rising wedge. That would put us up around 504-ish, somewhere right in there, depending on kind of when it would do that, and that would make a new all-time high. So you'd get the headline out there saying all-time new highs in tech sector. That would rally a bunch of kind of bullish money thinking we're going to continue to break out. But in general, from my perspective, it would literally be probably a very objective area to short, because you're going to be hitting all-time highs, but you're still within that bearish wedge, bearish with negative divergence. So bearish wedges typically are going to resolve to the downside. Widest part of the wedge, I have it about here. So depending on when we break down, all right, if we break down soon, then that's going to set us up for a push down to about 455. If we push up and make that new divergent, that new high, that new all-time high, and break down maybe next week, then maybe that pushes us down to like 460 or so. So we have to wait for the break of the wedge in order to trigger an objective sell signal. Or if we're going to rally into the top of the wedge and put in that new divergent high, I think it's objective there as well, at least for a kind of a starter position. Maybe a starter short right there, or a break of trendline support. So that's really what I have. I don't think the market's going to do much until these earnings start coming out. We're probably going to continue to kind of grind around with a small buy, with a bias to float higher. When I say float higher, I don't think we're going to have big, strong, impulsive moves to the upside until earnings happens. Maybe after earnings, we get some sort of a push up and make that new high. But I don't know. The pattern that I see here tells me we're going to the downside. So whether we go up on earnings and then down, or if we just gap down and break down, I do think we're heading down in the coming weeks. And that's primarily based on the technical pattern of this bearish rising wedge and the negative divergence. Okay, that's a lot on the SPY to say that basically I don't think we're going to do anything until we start seeing earnings. SPY or on the triple Qs. SPY, we already broke down on the wedge there. And, I could adjust my trend line like that. That is a possibility. I mean, if you look at it, I had it marked here because I had 3 distinct reactions. 1, 2, there's a third. Okay, so that's really the best fit, or it was the best fit, and we have broken trend and we're now back testing, kind of just hanging out. Again, this isn't going to go anywhere until the triple Qs breaks down. So we want to pop up, put in a new divergent high. That's completely possible. That would be consistent with the triple Qs going up, but it would just be a back test into resistance. So in general, that's what I'm seeing. I'm seeing kind of resistance overhead. I'm seeing the bigger picture being bearish setups that where we're likely going to go lower, even though maybe in the short term we have kind of little pops. All right. And again, I say maybe because there's no guarantee that's going to happen. All right. It might happen. It might not happen. We might just gap down and trap a bunch of longs or bulls that are, thinking that we're going to just go up forever. So in general, it makes sense from my perspective to either be short up here or go be flat, essentially looking for that short opportunity or that those objective short entries. Okay, so that's what I have on the SPY and the triple Qs. Maybe a little more upside or a little pop as we enter these earnings. Or maybe, a lot of the time what you'll see is they'll float those earnings out, the large cap tech earnings. They'll pump it in the after hours. It'll gap up. And then the next day, the sellers will come out and unload their positions. So that's always possible. We kind of gap up in the morning and it's just unload. The sellers are there to unload. So maybe that happens. Maybe it doesn't. Maybe we gap down. So I'm going to, just continue to kind of watch these. This one is very telling. This one's concerning. Okay, TLT. This is your long bond, right? And on the TLT, I'm looking at it and I basically have support, a couple reactions, a little bit there. We're starting to break down. So again, this one could be a fake out. There's any kind of moves that take place ahead of these earnings you have to take with a grain of salt. But we're continuing lower in the bonds, which means interest rates on the long bond continue to rise. Here's TNX. This is your interest rate on the 10-year. You can see it rising. Okay, so if this continues up, you can pretty much count that you're going to see the market sell off. All right. If you see interest rates continuing to rise, it doesn't matter about what these large cap tech earnings, what they come out and say in terms of like Tesla last week came out and said they think they're going to have a great 2025. Okay, 100%. That would only be consistent if you had interest rates playing ball. If look, they sell cars, right? Tesla sells cars. People finance cars. If interest rates go up, the financing costs more, less people will be buying Teslas, and prices will ultimately have to fall in order to sell those. So very important to take note of. So there it is, TNX continuing to rise, and we will definitely, this is going to be on watch. The more that this rises, all right, if you continue to see this move up, the more I would anticipate stocks in general to sell off. And that's the way, as far as I can tell, everything's technically set up that way. TNX, interest rates starting to break out. Triple Qs in a bearish rising wedge within the wedge, but with negative divergence, and just kind of holding out for earnings before it's likely about to break down. And that's kind of the setup that we have. So we've got some stocks reporting before the bell tomorrow. So basically today's kind of the last regular session before earnings. This is DH Horton. They're a home builder. And so here's what I see on this one. Now, again, everything ahead of earnings, taking a position ahead of earnings is much higher risk. But you can see momentum. Here's your negative divergence. See the momentum just dropping, just kind of falling off the cliff. So that really started to show up here. All right, so as price started to rise, made a new high in price, lower high in momentum. Then it dipped, buyers stepped back in, bought the dip, made a new high, new divergent high on lower momentum. And now we're starting to see the price actually rolling over. So those divergences were telling you that the top is likely near, all right, if not in, it's near. And we also have a head and shoulders. There's a shoulder, there's a head, there's a shoulder. So potential head and shoulders, and your neckline is ultimately has been broken basically. So it's technically a sell signal, which would mean, as far as I can tell, with the divergences and with the pattern that I'm seeing, it tells me, here's the neckline, tells me that earnings we're going to probably gap down somewhere down near the 200-day moving average, and it looks like there's a gap fill right about there. That's about the measured target, 162.51. I don't know if we gap down that far on earnings, but in general, I think we're going to push down there. It's about a 9% drop on for that measured target. So yeah, I don't know. That's the way I'd be leaning, but. And the home builders in general, XHB, I mean, they just continue to look weak. Here is a bearish rising wedge on the home builders. All right. Negative divergence. Kind of the exact same setup as triple Qs, except this one's already triggered. All right. We had a sell signal on the gap down, and look, we are lower. We're continuing lower. So I think that will continue. We are likely going to continue lower, and it can always back test. All right. There's always a possibility. Sometimes it'll back test. So you have to be open to that. But in general, this has triggered a sell signal, and it looks like we're heading lower down to about 111.28 for the next level of support. And then if I look at the one that I'm interested in, which is Pulte PHM, again, same setup. All right, exact same setup as the triple Qs, basically. Negative divergence, bearish rising wedge. The break came on a gap down, so it's impulsive. It trapped the longs, all right, and didn't really offer anything objective for shorts, at least not the most objective entry. But in general, that is a sell signal. All right, gap down, heavy selling, and we're moving lower. All right, you can see a little counter trend bounce, sellers. All right, today kind of muted today, and I expect the market to probably be muted into earnings, into these large cap tech earnings, but. Ultimately, this one looks like it's heading lower down to 120.77. All right, that's the target. Gold miners, I know a lot of people are interested in that one. Kind of taking a breather, which makes sense. Pretty heavy selling last week, especially on the large, on Newmont. This one still looks like it's in a bearish rising wedge with negative divergence. No sell signal triggered on the GDX. So miners in general, they can hold up, but you had a big breakdown in Newmont. This is Newmont. They reported earnings and missed big. You had a bearish rising wedge with negative divergence. There's a big sell-off. Support, your first level of support was right at 52.42, and that ultimately just sliced right through. The next level of support that I have is right about here. It's about 46.05. We got pretty close to that, so I think you're probably going to see a bounce in Newmont, and ultimately that would carry the rest of the miners up, GDX. Also, this was a bearish rising wedge, and if I look at the widest part of the wedge, which was really about here, you take that at the point of the breakdown, which is right about there, and that, again, sets the measured target to about 46.41-ish, and you can see we basically hit 46.80, so really close to that major target, to the point where I wouldn't really be interested in a short on this one, because I think in general a lot of the damage that was forecasted in the technical chart was done. All right, with that big sell-off, I mean, you literally wiped out it's wiped out months worth of gains in one day. So I don't think there's much there at this point. This is one of my favorite short setups because it's just a really clean and clear chart. Bearish rising wedge here on FITB. This is a regional bank. You have negative divergence, very clean and clear, and we're just still within the wedge. All right, you can see they're just kind of hanging on, waiting for something. Earnings is out of the way on this one, so that's good news. This one will likely move. If I look at JP Morgan when they report, I think they actually already reported. Yeah, the financials, I think, are for the most part are out of the way. So this will likely break down when we get some sort of catalyst, whether that's the large cap tech stocks, something, some sort of headline. But it definitely looks like it's a negative setup, and we should head lower. Widest part of the wedge is about here, which tells me if we break soon, we're heading down to, roughly 31.43 for the major target. So not triggered yet. Again, one thing is when you see such a clear pattern, usually what they're going to do, float some headline and gap it down in the after hours, and they're not going to give you an objective short entry. That's usually what we'll see. So I could easily see this thing gapping down, pretty big. So you kind of have to take the risk sometimes. If you think this is going to play out to the downside, it's at support, because obviously they could push it back up put in a new divergent high. This is a pretty mature wedge though, so I think it's probably gonna make a move sometime this week or next. I really wouldn't see it going past that. Semiconductor MPWR. This is just a single semiconductor, but in general, you have a pretty clear bearish rising wedge. You have negative divergence, momentum basically just dropping off. You can see the last time we had negative divergence on this one was here. All right, there's your divergent high right there. See the momentum? Momentum made a lower high, and yet price was divergent high. All right, so after that divergence, if you, let's say you went long because on basically this big jump up here, that was your earnings report. Okay, after earnings, this thing gapped up and ran. It was up at a high of 16%, okay, on that earnings report. So if you went long after that, then you essentially, that's kind of where it topped out. You went barely higher, and then from that high, it dropped 23%. So, okay, that's that. Now that was within that pattern, and this bullish or this bearish rising wedge had yet to develop more. So obviously, if you went long here, eventually months down the road, you started to make money. But if you went long right after earnings, it wasn't positive for you, and maybe you got shooken out if you were down 23% at some point in time. Now what we have is a bigger divergence that's been building for a while, and the pattern, the bearish rising wedge is pretty mature, so it sets us up for a break of the pattern. Doesn't mean it has to happen, but the widest part of the wedge here means that if we break soon, if we break now, that's going to push us down to about 621-ish. And if we don't break, and let's say they pump this thing on earnings and we make a new high, then we break in the future. So again, there's no sell signal. It's high risk to take any kind of position. We're sitting at support. We do have negative divergence, and we do have earnings coming up on Wednesday. So it's, a lot of these things are going to move, and that's the point. We really have to just keep an eye on it. I'm going to get the video guys out. Drop me a thumbs up, and I will catch you on the next one.